Okay, so once again, I'm the only man in the room. Ladies, good morning. Welcome. I don't know if you know, but one of my previous careers, I was a financial consultant, and a lot of times I see agents getting into the business, and they're so excited about getting into the business, they forget about how to set up their business. We put all our time and energy in getting the classes and getting our tests done, getting licensed, and then we get out and we get into an agency or a brokerage, and we get out there and we get involved in the buying and the selling, but we forget to take care of the things that matter, and that is how you're treating your money. And this morning we have with us Brittany Iden. She's a tax and accounting professional, correct? Nationally licensed, who's here to help us get our affairs in order or get them set up the right way, whichever the case may be. Brittany, thank you for being here, and the floor is all yours.
All right, awesome. So this is a little bit of a new environment for me. I love it. You guys are very lucky to have this. Um, so yeah, we will dive in. So this is Profit First for real estate agents. Let's see. I guess it helps if I'm clicking on the right screen. All right, so here is who is this lady, just because you want to know a little bit of who you're dealing with, but I won't stay here for very long. So this is me up in the top left-hand corner. I am a mom to 3 crazy kids, and this is my upgrade husband. He is husband number 2, and he was definitely an upgrade. Um,
I'm
three
sorry.
little, no, you're good. 3 little rugrats. They're not quite so little anymore. The boy there is a preteen, so pray for me if you are the praying type. Um, and then the 2 little ladies. So we are an outdoorsy family. I am a Girl Scout troop leader here in Louisville, Kentucky, and both of my girls are very active in that, as am I, obviously. And my family is obsessed with Legos, so that's kind of a fun thing. Usually, if I was doing this live, I would have a couple bags of fun little Lego toys to be able to throw out to everybody afterwards. And then this last one, this is a picture of a shirt that my husband got me, and it's very much legit. I will try to keep things not cussy at all this morning since it's still very early. But I I don't know any sailors personally to know how badly they cuss, but but I always use that term that I cuss like a sailor. So, and then here's kind of all the important stuff, I guess. So, credentials. Um, so I started off in tax about 14 years ago. At this point, it was 2006. After I did a first couple of tax seasons, I was like, I really like this. So I went to Sullivan, where I got my associates and then bachelor's in accounting and then a second in finance, and then continued on to Bellarmine University for my master's in taxation. Um, right after that, I was licensed as an enrolled agent through the Internal Revenue Service. So those of you who aren't familiar with what an enrolled agent is, think of it as a CPA that is tax focused but licensed federally versus by the state. Um, so that's probably the most simple way that I can explain it. And we typically don't deal with as many public corporations because that's one of the things that a CPA deals with. The certified public accountant doesn't mean public as in us as the general public, but is more geared towards those publicly traded companies. Um, so I am a member of the American Society of Tax Problem Solvers, and partnering with those guys, we have probably I would say hundreds and hundreds of years of experience in the tax resolution side. And I'm also one of 3 certified Profit First professionals in Kentucky as a whole, and Louisville's only current certified Profit First professional. And I am a Taxbot certified professional as well. So I'll get into more of that later.
Can I just jump in for a second?
Absolutely.
You know what? I don't know if you know this, but I think the Kentucky Realtors has a alliance with the Taxbot. folks.
Do they?
Yeah,
I know that we have a number of states that are on board. I wasn't 100% sure if Kentucky was.
we did at least
Um,
last year. I don't know if it expired or if it needed renewal, but yes, it was one of the
okay.
alliances that we had. So if you're so inclined, feel free to check that out. You can go to KentuckyRealtors.com and it should be it should be on one of those tabs.
Okay,
Anyway,
absolutely. No, that's good to know because I was asking about that as well with Taxbot. Alrighty. So let's see. Why did you choose to become a real estate agent? So this would normally be a polling question, but if anybody wants, they can drop it in the chat or turn on their mic and let me know. Um, One of the big things that I see is people do it to uh, I mean, they're doing it to make money, obviously, and then they are doing it to help people realize their dreams. But in all honesty, you're probably not going to do it if you're not making any money as well. I mean, you can correct me if I'm wrong, but you got to be making a little bit of something to make it worth your while. So, I profit first. I found Profit First not necessarily because of real estate, but because I was looking for a better way for my clients. Because every single client that I came upon seemed to be broke, which is not a place where you want your clients to be. But if your clients are broke, then they can't pay you, and that's not good for anybody. Um, but it is number 3 on Gary Keller's reading list. So if you haven't checked it out, actually on that back wall behind you, you could get the first 2 chapters of Profit First for it's just as a free download. You can grab that, check out the first couple of chapters of the book. And then I do highly recommend if you're not a reader, the Audible version of the book is fantastic. For those of you who are in Louisville and have been here for a while, um, Mike Shannon, WDJX, late 90s, that shock jock radio. That is what Mike McAllowitz sounds like. So it is incredibly entertaining. So we will get to our agenda.
do
So
people
here are a
call him
couple
the
of
Shannon Man?
no, not Mike McAllowitz. What is it they call Mike McAllowitz? I'll have to send you all it's a very funny little like website, just a little one-off that he has done where he actually plays a bunch of songs and it is quite hilarious. He is very good at making fun of himself. I'll give him that. He's a lovely dude in person too, very humble, seeing as how he has built and sold many businesses. So good for him. All righty. So here's some of the things that we will be going through today. There is actually, I posted it in the public chat initially, but I will do that again in a moment. If you want to do the worksheet while we are going along with this as well, then I will be doing a drawing at the end. And giving away a free full copy of the book that I will have Amazon shipped direct to your door. So that is the worksheet, and then here is the Profit First overview. Alrighty. All right, so addicted to axioms. Does anybody offhand know what an axiom is? I'm not sure that you do. I had no clue either. Um, but so basically what an axiom is it's a statement or proposition that is regarded as being established, accepted, or self-evidently true. So one of those axioms is the world was flat. So that's one of those things where if the prior generation says that it's true, the current generation automatically assumes that it must be true. And then you know what those people say about people who assume. I'm not gonna dive into that, but I should have put that up here. That would have been funny. So this is actually one of my favorite quotes from Men in Black, but there is a whole lot of truth in it. So 1,500 years ago, people knew that the Earth was the center of the universe. 500 years ago, people knew that the Earth was flat. So these are things that people knew that have been proven to be wrong or different. So many things over the course of the years, decades, centuries, however, that we have known have been proven to be either completely wrong or some variation thereof. So one of these things that people know is the accounting equation. And while I'm not saying that it's completely wrong, I'm going to show you a different way to think about it. So here is the standard accounting equation. I'll run through this pretty quick because obviously this part is, it's fun but boring. I think it's fun, but I'm a tax accountant and I'm a super nerd. So this formula for business has been around for years, but it's kind of crap. Just saying, it is. So look at the equation and really think about it. Sales, which is a requirement for all businesses, minus your expenses equals the profit, meaning that you, the business owner, get what's left over, no matter how big or more commonly how small that is. So we've been doing it this way for years, and quite frankly, it's wrong, but it's not anybody's fault, and no one is alone in thinking this, and it's fixable. It's just we trusted the people that were there before us, and they got stuck in their ways. So change sometimes takes a little bit of effort, and sometimes it's scary, and I get that. So we were given and taught this incorrect method. So it's a part of GAAP, which is the generally accepted accounting principles. And while GAAP is foundationally correct, the profit formula that it touts, sales minus expenses equals profit, is a lie. There are 28 million small businesses in the US, and 22 million of those are break even. And they all use this formula. This means that roughly 80% of all businesses are surviving paycheck to paycheck. So accounting alone focuses just on the numbers, and it completely ignores the human behavior. So this one's a little bit interactive. Take a look at these two people. We have person A and person B. Can you tell me which one is good and which one is bad? You can toss that in the chat. I would really like to see what everybody's feedback is. I'm going to wait and give you a second to actually do it.
So I would say they're both the same.
They are the same, yes. So you all are smarter than the average bear. Because most people that I deal with, they end up saying that person A is bad and person B is good. And the reason that they say that is pretty psychological. It's actually, there's a name for it. It's called the priming effect. So, and what the priming effect tells us is that the order in which we see things dictates its importance. So with person A, you see evil first. So most people would typically say person A is bad, and then with person B, you see love first, so you would typically assume that they are good. But like I said, you all are smarter than the average bear there, so good job. I appreciate that. That gives me hope. So, but this is still brought up throughout all aspects of our lives, and it's even more so with this accounting equation. So here is our old formula. The sales minus expenses equals profits. So this is where we are going to flip that script, because this isn't the best way, and it's definitely not the profit first way. So the new equation is exactly the same mathematically. The result will be the same. It just depends on how you think about it. So, because we swapped the expenses with the profits, we typically will instinctually put more importance on the profits than we do the expenses. And as we should be, because in all reality, your profit, which is the money in your pocket, is far more important than expenses. So, profit isn't an event or something that happens once or twice in your business, but it should be a habit, something that you are experiencing every single time that you deposit a check. And then, so do most of you all in here run a profit and loss statement before you make a decision on whether or not to make a purchase? I'm gonna go out on a limb and say no, because I don't even do that, and I'm the accountant. Um, I mean, it's an incredibly inconvenient way to do things, but that is how it should be done as a business. You should look at that profit and loss and any estimated things that are due to come out to see if you have money to spend. But like I said, we don't do that because we are instinctual creatures and we don't do these logical things a lot of times. We are going to do what our instinct is. And most times that is just check the bank balance. Um, I know I'm guilty of that all the time. I'm going to pop open my phone, check the bank balance, see, oh, I've got enough money in there, I can buy this thing. This widget will say. So, but if you're not a business, or if you're not checking your P&L, it's not going to be work out all the time the way that you need it to. So, but we're not going to check our P&L because it's not convenient, and it's not something that we are going to do. So, here's where the kicker comes in now. Most people use one account for their business. Um, a lot of people will set up like a different savings account for things, but most people still will fall in that one account. And a lot of times, something that I see is people will use their personal account for their business account or vice versa. So I'm not going to ask anybody who's guilty of that to like raise your hand or say so. Because in the eyes of the IRS, that is one of the biggest no-nos, and it kind of makes my stomach turn as a tax lady. So, but I've seen far too many audits that have went south specifically because of that. Also, just a little tidbit: if you are an LLC, which you hope will, um, protect you in the event of anything happens, if you are commingling funds, doing that lifts that veil, and an LLC does not matter because the IRS will say, nope, you are your business. And even attorneys will say, nope, you are your business, and you personally would still be able to be sued even with having that LLC. So just a little bit there. But back to this one account business. So I'm sure if you all are like me, you all have had times where you all have done this, but have you ever written a check to a business or a person and they didn't deposit it immediately? And eventually you thought that the check had been cashed. So you just went in and were like, oh, this money's there, assuming that the check has already been cashed. So I've got money to spend. Woohoo! And then bam, that person decides that they are going to, they're going to cash the check, which rightfully so. It's their money. So, but they cash it at a really inconvenient time for you, and then you get hit with all the craziness that happens afterwards. If you were low on money in there and you spent extra money, then you might have overdrawn. Or it might have put you to a point where you couldn't make a next payment on something else. So this happens all the time when we are doing bank balance accounting, and it doesn't work. So, but it can work if you put in some fail safes to keep a track keep track of what's going on. So, all right, this is our lesson from a tube of toothpaste. So, Parkinson's law. As the availability of a resource increases, the demand for that resources increase at the same rate. So this comes into play in every aspect of our life, but the most noticeable area is time and money. So this toothpaste is an everyday example. So we go to the store, we buy a brand new tube of toothpaste. That first week, we are putting that huge Aqua Fresh, like TV swoop of toothpaste on our toothbrush. And a couple of times in there when we do that, we might drop a big glob in the sink. And it's okay though, because we have plenty of toothpaste left. So we're just going to wash that down and we are going to go with it and continuing on brushing our teeth that time. So then the weeks pass, and eventually we end up with this little shriveled curl of a toothpaste tube. So we keep forgetting to add it to the grocery list. So we got to make it through at least that next day and potentially that next day, because let's face it, we're going to forget again. So now instead of that big commercial swoop, we are working with just like a little smear of toothpaste, just enough to like clean our teeth and get them kind of fresh smelling. And then, oh my goodness, you drop that tiny little amount that you had left into the sink. So instead of washing it down the drain like you would have initially, if your sink's clean, then you're going to go in there and scrape it out and use it, and you're going to get those teeth to sparkle. So eventually we are using all of our might to roll that tube of toothpaste up and get, like, you're turtle heading it out, pushing it with two thumbs, and you're trying to hold the toothbrush in your mouth. And I promise this is more entertaining if you can see what I'm doing right now, because I'm totally still doing all of the hand motions. Your toothbrush is in your mouth, you're trying to use your teeth to get that last little bit of the toothpaste off the end. And or you do my trick and you like cut the end off of the tube of toothpaste and you stick the toothbrush down in there and you're like scraping it around to try to get some out. So this is a perfect example though of Parkinson's law. But so with time, if you have 2 weeks to complete a project, it will take you that full 2 weeks to complete the project. But if we have 2 days to complete a project, somehow we will find a way to do it and make it happen. We'll get creative. We'll be innovative. We will find ways to get that done. And the same thing holds true for money. When we have it, we spend it. We may go out to a huge fancy dinner every night. If we don't have it, there's nothing to spend. So we are going to get creative. And so we might be raiding the cabinets, looking for those cans of whatever that haven't been eaten that are sitting in the back of the cabinet to get creative and make something. So the end result is the same. We are ending up with a full stomach. And sometimes the creative things that you make at home taste better than what you could have got out at the fancy restaurant. So, but the same holds true for money. Like I said, if you have more money, you will spend more money. And if you have less money, you're going to make do with the less money that you have. And I can guarantee you that you will feel better about the result afterwards, because you got creative and innovative and you made things happen. So, small plates. This is still more of that Parkinson's law here. But has anybody realized that if you use a larger plate, you tend to put more food on it? So then if you have a smaller plate, you are going to put less on it because there's less space. We still end up feeling full at the end of the meal, but I'm not sure if you all do what I do. If you fill up your big plate, then you slightly feel guilty, like you have to eat everything on there. So you really try to. So by the end of it, you feel gross because you ate so much more. And also, those large plates are not great for our waistline. Um, but again, this holds true for our money as well. If we limit what we can spend, we're going to spend less. All right, so here is where Profit First really comes into play. These are your 5 foundational bank accounts. So, and this is what we do. We portion it out. So I know 5 bank accounts sounds like a lot, but I've been using the Profit First cash management system in my business for 3 years now, and it actually makes the accounting part of it easier. So I'll explain how on that later. But first, let's get into these accounts. So the first of the 5 accounts is income. So the income account kind of acts like a serving tray. And just like it sounds, this account is where all of your income goes. All of your checks, direct deposits, however you receive income, it all goes into this income account. And again, like I said, this is kind of the serving tray. So now we will each have our preset percentages for each of these other accounts that will be transferred from income. So Profit First has a set of target percentages that are a fantastic reference point for determining where you want to be. These percentages were developed by taking averages of many different size businesses but all the most healthily fiscally healthy. Yeah, that's the best way to say it. All the most fiscally healthy businesses in the country, and they developed this chart of percentages that is kind of based on your income range. So I will share that towards the end, and everyone is welcome to kind of figure out where they are. But these percentages, we take these and we put them into this plan. Let's see. So, all right. So 4 steps to Profit First. So as you can imagine, when you are eating your dinner, if you have your vegetables on your plate first, you are going to eat that healthy stuff first. So this is our steps towards getting the money into those additional accounts. So vegetables first, which is going to be your profit and your owner's pay. And we follow that sequence because of the priming effect, because if it's there, we put more importance onto it. And then we allocate and we distribute and then we pay the bills. All right, so allocation, and your order is everything. So our deposits are going to flow into the income account, and then we allocate those by percentages, and then we transfer those into that other account. So on this list, we see profit is first because profit is the most important thing that most people want in their businesses. So profit is followed next by owner's pay. So both of these items being first demonstrate one thing that you should kind of already know. I hope that you all know that you are the most important person in your business. Now, next comes the IRS and tax, because let's face it, they are the most brutal collection agency in the world. So we want to keep them off of your back. Then last comes your operating expenses. So the operating expenses being last, you're showing yourself what you can do to make it work. Limiting your operating expenses, you will actually be more innovative and you can be more efficient, and obviously you're going to be more frugal. So when you plow back or reinvest money into your business, you actually typically start to push and try less than you would because you have more money to play around with. So, in a sense, having more money in your operating expense accounts kind of makes you lazy. So, let's see. Who here likes snacks? I wish like your little people could raise your hands because I mean, most people like snacks. But did you ever notice that when you buy them and you have the snacks in your house that you're going to eat them? So I'm sure I'm not the only one here. There we go. I see it. Yay, hand raised. I'm sure I'm not the only one here who has noticed that their pants have gotten a little bit tighter since COVID started. So you're home, you have those snacks available to you, you're gonna eat them. But if you don't have those snacks at home, you don't have access to them, so you can't eat them, which is what I've been trying to do here, to not buy those snacks or buy the snacks that only my kids like that I think are disgusting, so I won't eat those either. That's my trick. Feel free to use it. So, out of sight, out of mind. Now, this might be a little bit confusing, but this is a great way to really keep that money that you don't want to spend out of sight and out of mind. So I know the idea of multiple banks may be scary to some, but it's sometimes, most times, absolutely necessary. Because just like the snacks in the house, if it's there, you will somehow talk yourself into using it, somehow talk yourself into eating it. And if something's not accessible, we don't use it because we can't use it. So bank number 2 is sometimes referred to as the Inconvenient Bank or the PITA Bank. I'll let you figure out that acronym. So at this bank, you will not set up online access. You will not get checks for the account. I have seen people who sometimes will choose a small community bank in a neighboring county or state just to add an extra level of inconvenience. I personally chose a small bank locally that has very inconvenient hours. I think I've actually maybe discussed with Rob and Rip what that bank is for me, but I won't say it publicly because it's a great bank. They're just really inconvenient for me. Um, but they have horrible hours. So it has to be like a real life emergency for me to make the effort to get to that bank on their time. So I have no access to that bank other than walking in and waiting in line to get what I need. And right now with COVID, there's an added inconvenience that I have to make an appointment to get into the bank. And realistically, out of these 2 accounts, this profit hold and tax hold, you should only be making 4 withdrawals from those accounts a year. And what those are your quarterly tax estimated payments and a quarterly profit distribution, because you as the owner need to be treating yourself like the owner. So let's see, let's go on to the next one. So this is step 4 for us. So profit first is one of those places where the rhythm method actually does work. See, I can try to be funny sometimes. The standard rhythm is transferring money on the 10th and the 25th. So now the logic behind these dates is that if you transfer money on the 10th, you can pay the bills that are due on the 15th. And if you transfer money on the 25th, you can pay those bills that happen at the end of the month or at the beginning of the month. So those 30th or 1st bills. But one of the bigger reasons is because you will start to see a pattern with this rhythm. Now you can change up that rhythm, but one of the things is you need it to be consistent. If you want to transfer all your money on a Friday or a Monday, just make sure that you're doing it on that one consistent day of the week, because the pattern really will show you a lot of things. So as real estate agents, typically speaking, I know right now it's a little weird, but you all deal with seasonality in your business, and I do as well. It also affects many other industries. So, but if you are doing this method, one of the things that you will start to see is the pattern, and then you can start to know what to expect and work with your accountant or profit first person to develop strategies to make sure you are covered during those times when business may be a little slower and not overspending when things are booming. So you're a business, you should treat yourself like one. So all big businesses issue a quarterly profit distribution. So you should too. Just like the big businesses, when the quarter is over, you are going to issue yourself a profit distribution. Now, this distribution should be used to celebrate, no matter how large or small, it is an accomplishment. So every quarter, you should also be talking with your accounting partner to discuss where you are and what you can do to get where you want to be. So in profit, we call these CAPs and TAPs. So CAPs stands for current allocation percentages. So the CAPs, the current allocation percentages, is where you are now. And the target allocation percentages are where you want to be, where your goal is. And the spreadsheet that I'm going to be sending out to you all, or uploading here in just a little bit, that has those target allocation percentages in it. So, and a quarterly review of your current allocation percentages and some small adjustments will definitely get you closer to those target percentages, and eventually get you to where you want to be. So let's see. I have a few actual tax tips in here for you all as well. But this has actually been posted on that backboard back there. If you want, you can get the first 2 chapters, like I said, of Profit First for free, and I'm posting that in the chat as well, that link. And I would love anyone who reads the first couple chapters feedback on it. And that will also, that link, if you want, you can also sign up for a free discovery call if anyone wants. It's about a 15 to 30 minute call, and we can dive deep into some of the things in your business if you would like. And really just kind of, if you have any questions about Profit First and what it can do for you, then here's another little fun one. So recently, and I'm talking very recently, I started the Profit First for Real Estate Agents Facebook group. If anyone wants, they are more than welcome to join that. This is not a fee-based group by any means. It is there for resources for you all. I plan on going in there, answering questions once or twice a week. Everyone is welcome to join if you all would like. And then, because I am deep down a tax lady, I wanted to share with you all some tax tips. Because I have to. It's just who I am. So, tax tips here. File early. I know a lot of times it's scary to get everything together, and a lot of times you have to get things caught up. But the earlier that you actually get your taxes filed, the more time you have to prepare. So, if you file your taxes in January or February, then that gives you until April 15th to make that payment. So now that goes along with that is if you do have to file an extension is not an extension of time to pay, only an extension of time to file. So your payments are still going to be due on 4/15, or you will receive a failure to pay penalty. And that failure to pay penalty is typically a pretty baseline penalty, but they are going to start charging interest on any amount that you owe on that 4/15 date if you don't have a payment sent in to them. Now, here's where it gets fun. So, the more aggressive that you want to be with your tax deductions, the better your proof needs to be. So, this means you need to have fully IRS compliant records, no guesses, no estimates. Now, one of the reasons that I bring this up is because very recently I had someone who came into office and they are under an audit from the IRS. All of their expenses, I can almost guarantee that they are legitimate. They did have it backed up with credit card documentation, but credit cards don't show an itemized receipt, which is what the IRS actually requires. So the IRS, even though we tried to fight it as much as we could, they disallowed probably $30,000 in expenses for this individual, which means that they ended up owing about an extra $15,000 after penalties and interest were tacked on to that amount. And that's money that they weren't expecting to owe. And nobody wants to be in that position where you owe the IRS a crap ton of money after the fact, especially when you're not expecting it. I've been there. That's one reason I got into tax myself. My ex-husband came home with a tax bill that was around $10,000 to $12,000. I was 21, and I said, "What the heck is this?" It definitely wasn't a good thing for our marriage. Newly married, I was like, "This is all your fault." So no one ever wants to be in that position at all. But so that's where I wanted to talk about the mileage and expense tracking applications. Don't just have them, use them. And Rip, I'm absolutely going to check in to see if Kentucky is a part of the Taxbot network, to see if they still are, because a number of real estate associations throughout the country are partnering with Taxbot because it is the only application out there that is fully IRS compliant when you use it fully. So it's not just mileage, it's not just expenses. It does all of the matching for you. Were you gonna say something, Rep?
I was going to say, so you would recommend that to be the most efficient, most accurate, and the easiest to use, yes?
Yes, without a doubt. So one of the things that I really love about TaxBot, and if I had it to be able to like figure out how to show you all a demo of the way that I use it as well, I would. And I'm more than happy to sit down with anyone one-on-one who wants to use it and discuss it with you all, or however, I can find a way to do a demo of it another way or record a demo. Um,
Is there a fee? Do you know?
for a TaxBot, there is a fee. And then, but it's relatively inexpensive. You can get this promo code right here. You can get 15 months for $100. Typically, it's around like $10 a month.
Is that
Other than that,
$100 deductible?
yes, it is fully deductible for you. And one of the
Fantastic.
benefits is it can also track if you do any charitable mileage. So for me, when I do Girl Scout mileage and delivering cookies, I can actually code that differently in TaxBot, and it will track all of that mileage for me as well, which is very lovely.
Can I
And
ask you a mileage question?
yes, absolutely.
So I've got a rental property and it's 15 miles from my house. If I go to the rental property to do a check or a visit, whatever, and on the way home I go a mile out of my way to get a car wash or groceries, does
Mm-hmm.
that trip back then not qualify as
Well, so your trip
mileage?
to the rental house and then from the rental house to wherever else you go, that counts. But then from the grocery store or the car wash home does not.
Okay, sounds good. Thank you.
So, And I will say one of the reasons why I do love Taxbot, and they are the only one that I have seen that has done this, is they actually allow you to link up with your Google Calendar or whatever calendar it is that you have on your phone. If you're an iPhone user, it'll link up to Apple Calendar. Um, but the thing that's great about that, if you're like me and you're super anal about making sure that everything is on your calendar, because for me, if it's not on my calendar, it doesn't exist. Um, but it will actually match that mileage transaction to that event that is on your calendar. So that makes you more IRS compliant. So I'll use Rob as an example. So before COVID started, probably right before COVID started, him and I went out to lunch because I wanted to pick his brain. So it was a business lunch for me. Um, so my drive to the restaurant where we had lunch, the receipt for the restaurant, the calendar invite, and then my drive home. That all matched up into TaxBot for me. So that trip, I am 100% solid, is fully IRS compliant because I wrote notes in the calendar invite. Meeting with Rob St. John to pick his brain about business stuff. Um, and the receipt, it had both of mine and his meals on it, so I was able to attach that to it, and then I have the mileage for it. So that trip right there is fully IRS compliant. And if anybody uses any type of scheduling application where it puts something onto your calendar for you, I know for tax science and for some meetings I use Acuity to schedule those things out for me. So it drops that meeting onto my calendar. So if I have to drive to the office specifically to meet with someone, then that drive to the office from my home office for me, because I'm only going in to meet with that one person, links up with that calendar event, and then the drive home. So that all, it automatically makes it IRS compliant. And one of that, the where it links up like that is very lovely. But at the end of the year, you can actually download it basically comes out to be a book, because I've seen a lot of people's mileage records, and it can be a stack of 100 pages, but TaxBot will allow you to print out their audit proof book, basically, of all of your expenses throughout the year. Obviously, you can download this as well. And there is a one sheet at the front of it that totals everything up really nicely for your accountant, which is one reason I really love it, because please bring me that one sheet and not a stack of receipts. Um, but that audit proof book, I have actually personally been able to walk into an audit, hand this book to the revenue agent and say, here is our proof. And they basically dismissed the case right then, because they saw that excuse my language, we had our shit together. So we had it together, and they said, okay. And, that was like a 20-minute walk into the office and walk right back out. Nice and easy. That is the best way that you could hope to get out of an audit. So TaxBot is lovely. This code here will get you 15 months for, it's $100, and it does kind of have a little bit of a demo, like the one of the owners of the company kind of walks through the video and shows you some of the things that it does. But if anybody wants to talk about TaxBot, I'm more than happy to sit down with you after the fact. And obviously, real estate agencies and state associations across the country are using it. So if Kentucky's not, I might need to pester them about that a little bit and get it back on there, because it's totally worth it. All right, so questions. Anybody?
Hey, folks, now's your chance. We've got a nationally certified tax advisor sitting right in front of you, willing to answer your questions free of charge.
Absolutely.
You don't get opportunities like this very often. Speak now or forever pay taxes.
I've got one question.
Oh,
Go, Danny.
yep.
Our showing time app kind of logs where we've been with our showings. Can we like print a report with that and pair it with our tax info? Would that be a good idea?
That would absolutely be a good idea to do that. You should definitely be pairing that with whatever mileage tracking app that you are using. Does that actually populate it into your calendar?
I don't have it set up that way. I'll have to research and see if I can do it that way. If I can, I'll do that.
Okay, yeah, because if it would pair with your calendar, I mean, that would actually just be a double whammy, which would be really lovely. You would have it tracked in two places, and that is even better. Because, like I said, the more I always I have people that ask me how aggressive that I am with taxes, and my response is, I'm going to be as aggressive as your record keeping is. So, Rob asking about relationship between Taxbot and QuickBooks. Um, so there is not a relationship between Taxbot and QuickBooks. And that is really because it kind of takes the place of what a QuickBooks self-employed would be. So you can't invoice from it. But typically speaking, for most, yes. So TaxBot is a replacement for QuickBooks Self-Employed. It's not a replacement for the full service QuickBooks. But like I said, you can't invoice from it. So if you are needing to do that for any reason, if you were adding anything additional on, then maybe you would still need to be able to use a full version of QuickBooks. But for the most part, most real estate agents don't need a full version of QuickBooks. And I'm sure you're not wanting to spend the $20 to $35 a month that the full version of QuickBooks is. Most people tend to stick with that self-employed version because it does have the mileage tracker. But from the accountant perspective, even though I can have accountant access to someone's QuickBooks self-employed account, QuickBooks self-employed is a nightmare. I mean, and I do QuickBooks for a bunch of other bigger companies, but I try to stay as far away as possible from QuickBooks self-employed because it's too much of a mess. One of the things too with Spot, you can link your accounts like you would with a QuickBooks Self-Employed, and it will match, like QuickBooks Self-Employed, it will match that receipt to the transaction and the description that you have in Taxbot. So one of the things that I typically will do this, I will snap a picture and go in and write a description of a receipt if I am there, but I know a lot of times that's not something that's like immediately possible to do if you're out on the road. If you're picking up coffees for someone, you can't really like sit there in the line at Starbucks and type in everybody's stuff. So with that, my recommendation is just snap a picture of that receipt. That way, if and when you lose it, because if you're anything like me, you are going to lose the receipt, then you can just upload that into TaxBot kind of at a later time. A lot of people will sit and kind of do their TaxBot stuff once a week while they're sitting on the couch while their spouse is watching whatever annoying TV show that they're watching.
Big Brother.
My husband watches a lot of hunting shows, so that's what it is for me. So, but it's really easy to do that, and then you don't have that box of receipts at the end of the year, and you're not spending that time totaling up those receipts at the end of the year, and then you don't have to worry about an extension because, when let's say you finalize the last bit of your stuff middle of January, you can go on and send that report into your accountant, and then all you are waiting on at that point is the rest of your snail mail to get there. W-2s, 1099s, those types of things. If they're coming, or your spouse's W-2, that type of thing. Then you're just waiting on that, and then you can really be prepared.
And don't forget, if you're doing this with your phone, it's likely to geotag unless you turn that off, and time and date it, which also could be helpful. Yes.
Absolutely.
Hmm.
Absolutely.
Is there
So,
anything that you would any expenses that you might see realtors doing where they may not realize it's deductible?
well, one of the things that I don't see real estate agents doing that they should be doing um, is setting up a SEP or a simple IRA. Um, they're setting up their retirement account because being self-employed, you actually have a lot of leeway when it comes to setting up those accounts, and you can sock a lot of money away in some of those accounts as well. One of them, it's 25% or up to, I think right now it's $58,000 that you could put into a retirement account as long as it's one of those self-employment retirement accounts. And that is really lovely. And then you can deduct a portion of that off of your income for tax purposes. Other than that, one of the things that I see the most issues with is really a lot of just people not tracking their expenses and their mileage properly. Um, so now for real estate agents, most people tend to take just mileage, um, which right now is 45 cents a mile. It's varied over the past couple years. Um, but depending on what kind of car that you drive, you can actually a lot of times have a much better return on your investment by doing the depreciation and your actual expenses. Um, and then there are a lot of additional expenses that you could take by potentially driving your spouse's car once in a while. So now the big trick there is you still actually need to, it's not just tracking mileage at that point. It's tracking, you still have to track the mileage, and then you have to track all of the vehicle expenses as well. So that would be every time you purchase gas, every time you get an oil change, tire rotation, new tires, um, you get your radiator flushed, anything like that. Um, but the reason that you have to track all of that additionally is because all of those actual expenses, you can actually take a percentage of all of those actual expenses, but it is based on that percentage of mileage that is for business use. So that's kind of why you have to track both. Most people don't typically do that, so they're actually missing out on a pretty substantial expense there.
Good advice. Any other questions?
Rip, did I
Anything at all?
miss? Yes, Rip, this is Sarah.
Hi, Sarah.
I had to take a couple of phone calls, so please forgive me if I ask a question that's already been asked. But this information is so valuable. Hope to be able to get a link to a recording to rewatch it. My
Yep.
question is about QuickBooks and Taxbot. Is there any kind of integration between those two?
No, there is not. Are you currently using a full version of QuickBooks or the self-employment version?
No, I use the full version.
Okay. So Taxbot really kind of takes over um, for QuickBooks when it comes to the self-employment version. Most people typically don't need a full version of QuickBooks that are just real estate agents. If you're doing anything outside of a just being a real estate agent realm, if you're doing any type of like house flipping or anything like that that would be associated with it, the full version might actually be better. Um, but typically, what I see is a lot of people who try to use the full version, they're already paying more per month for it because QuickBooks Online Essentials right now is $35 a month. It's $20 a month if you can get the wholesale pricing. Um, but a lot of times people will get themselves kind of in trouble with it just because there's so much going on and they change it so often. It's even confusing sometimes for accountants who are in it daily versus people who are only touching it once a week or once a month. So, but Taxbot really can take over the QuickBooks realm, especially if you're using QuickBooks Self-Employed.
All good questions. I think people have been paying attention. How about you?
Let's see. Rob, hang on. So with Taxbot, is there a way to allow your Taxpro to access your info similar to an accountant login with QuickBooks? So currently there is not, but one of the ways that when I set it up for my clients, because I'm not going to say I force feed it, but for my annual package clients, I actually include the Taxbot app with it. So the way that I set that up is I will actually give them, Rob, I'll use you as an example. I would sign you up. I would create you an email address, Rob St. John at identax.com, and that would be your login email address. And then basically I would set that email up to automatically forward everything to you. But so I would set that up and then issue you a password for that. You could always change it if you wanted after the fact, but what that would do is I could set that, I would get like a password reset email if I needed to log in and do it. But really the big thing is it's super easy to go in and print out that quarterly report or print out that annual report. Typically I require, when I'm doing an estimating someone's quarterly taxes, I'll just tell them to send me that full year report, and then I can plug that information into my spreadsheets and formulas to get a calculation on that. So you can't really share it with your accountant, like the access like you would with QuickBooks Self-Employed, but it's very easy to print out and send a report from it.
One more question.
Yep.
Brittany, in your experience, what is the number one tax deduction that most realtors fail to take advantage of?
Well, like I was kind of mentioning earlier, it's a tax deduction that realtors and real estate agents are taking. They're just not taking it appropriately, and that's kind of using the actual expenses for their vehicle versus the mileage. I do also see a lot of times, now it's not a missed one. People definitely take gifts, but there is a way that you can work gifts, like client gifts, to make it the most beneficial. So typically speaking, you're only allowed to gift someone up to $25 a year and deduct that as an expense. And a lot of that is in the record keeping. But let's say you give somebody a $100 gift card. If they're a family of 4, you can deduct every single bit of that because you just need to break it down. There are 4 members of this household. There's mom, dad, brother, sister. Each of them is $25. And if you wanted to make it as clean as possible, I would almost say a $25 gift card, or like get 4 $25 gift cards. That way there would be no questioning that. Also, if you're using QuickBooks, which it sounds like you're using the full version, definitely break up the account, because that will be something that the IRS would want to see. I typically set up gift accounts in QuickBooks. Is I will have gifts there are gifts that are $25 and under, and then I will have another account that is gifts $25 and over. What that does is that shows the IRS that you are actively maintaining those records. So let's say you got a single homeowner a $50 gift card for something. So you would actually break up that transaction. 25 of that would go into that gifts 25 and under, and then the other 25 would go into that other account. So when you pull those records at the end of the year, your tax accountant would see that this is the account that's deductible, this is the account that's not deductible. So let's see, Rob, on that same topic, is there validity to applying a logo to a gift and it is now a marketing expense? So anything that you have your logo on, for the most part, I mean, obviously if you put your logo on a boat, it's not a marketing expense. But if you're putting it on something that is a gift, a lot of times, yes, typically speaking, if it's under a $10 or $25 range, you put your logo on I will get to that in a second, Rip. If you are putting your logo on, let's say, a Yeti cup, then you can definitely consider that as a marketing expense. So, and we know Yeti cups are like, I don't know, ridiculously expensive, like $50 a piece. You can consider that a marketing expense, because you could also consider a $5 coffee cup with your logo on it a marketing expense as well. So that, I mean, just because it's a higher quality one, that won't make it not a marketing expense. But now I will say, if you are putting logos on clothing is definitely one big, like, hot topic. So with clothing, if it's something that you can still wear every day and it not look see, then it's not a marketing expense. Now, if you have the logo put on it yourself, then the cost of putting the logo on that shirt or that jacket or whatever is a marketing expense. So I had a bunch of sweaters embroidered with, like, my logo on it. So the cost of having the logo put on it for me, that was an expense. But because I wear that sweater every single day, the sweater itself wasn't an expense. Now, if you are buying it pre-printed, if you are buying it, let's say, from an EXP store, then because it's already branded and logoed, you would have a much better chance at proving that that is a marketing expense, because the chances are is you're paying more for it to be branded and logoed than you would otherwise, just because that's typically how these things work. So, to Rip's question with wrapping a car. So, the wrapping for the car is an expense, but that doesn't make you able to deduct any more of the car than you would already be able to. That is very much a common misconception. Now, I will say, wrapping your car, that might be something you would want to talk with your insurance agent about, because sometimes that can bump you into a little different rate with them, because you are promoting it for business. And a lot of times, if people see a wrapped car and it hits them, then they think, because it's a wrapped car and you're a business owner, that you can afford to pay them more money on the back end. Clear as mud.
Wow.
So actually, at one point I did take off the writing that I had on the back of the window, just because I know I'm an aggressive driver. Let's just say that. So I didn't necessarily want people associating my business
Oh, yeah.
with me.
I'd
So
be calling you.
that's another thing. It's just how it is. So let's see. Rob says, let's pretend I'm getting ready to set up as a Profit First super agent and I'm about to partner with you and get going. What are the most important steps to take? Realistically, you want to have your financial house in order as much as possible. before getting ready, because in the discovery call, a lot of times we will go over where you already are financially and then dig in to where you want to be financially. So a lot of that is having that financial house in order. If you need help with that, that's obviously, I mean, a conversation that we can have as well. But realistically, with getting started with Profit First, one of the biggest things is read or listen to the book and have an open mind. Um, thankfully, people are definitely open to changing their way of seeing things because, I mean, at least with my experience with a lot of newer real estate agents, they come into me that first year and I get this oh crap moment because they didn't know what to be expecting. They had a great year and now they owe $70,000 to the IRS. And I still see it every single year. So, one of the things that's really kind of a vicious cycle is people will they kind of get into that group. Like their first year in real estate, it's almost hard to dig yourself out of a $70,000 hole and then prepare and pay an estimated taxes for that next year. And that's the cycle that I usually see a lot of real estate agents on. So that's definitely one of the good things about Profit First is it really helps to break that cycle because you can only be on an installment agreement for so long every single year. So yeah. Anybody else? Anything? I'm an open book, I promise. Oh, I
Any other
did
questions?
mean to share this as well. So I'm putting this in the chat. So here is um, the link to that Profit First instant assessment. So this is kind of like a really quick assessment, but it does show in there the chart of those target allocation percentages that you'll want to see to kind of see where you need to be and where you want to be. Typically speaking, for most businesses that bring in $250,000 a year or less, the standard percentages are 50% for owner's compensation, 5% for profit, 30% for expenses, and 15% for taxes. And I know that 30% for expenses sounds kind of high, but it's actually pretty close for real estate agents when you take into account their mileage deduction. So a lot of times when people are thinking, oh, well, that sounds pretty darn high, it's really not that high in the end after we've got that mileage calculated out. Because that's something that a lot of times doesn't get thought of or put on the tax return until the end of the year. So that kind of typically hangs in there and it's an expense. And definitely one of the things that you should be doing is taking your mileage tracker for a month and reimbursing that to yourself because it's not necessarily just an expense, but it's a reimbursable expense to you all. So drive your 100, 500, I'm sure it's way more than that for you all. Um, but drive your 2,000 miles a month and then take the standard mileage rate because at a minimum that is what you are going to get from the IRS is your standard mileage rate. Calculate that 2,000 miles a month times that 45 cents a mile and reimburse that to yourself because if you're spending money out of your personal account for your gas, then you need to be reimbursing yourself for that. So that's kind of like a little added extra bonus that you're going to be getting at the end of at the end of the month that you might not have been thinking about. So
Good advice.
And then I'm going to put this up because it's cute. Look at those little piggies. They're so happy. I love it.
Does that mean that realtors are little piggies?
I mean, they're little piggy banks. But they're so cute.
Okay.
If you can see my face right now. So
I'm sorry. I didn't mean to embarrass you.
Oh, you're fine. You're fine.
All right.
No, it's actually funny. You all haven't. I talk with my hands, and you all haven't seen that because I'm still talking with my hands right now, even though no one can see me.
Gotcha. Good deal.
So.
Okay.
But yeah.
Well, last chance. Any final questions? One more question. Anybody? Besides Rob?
Rob knows how to get a hold of me too.
That's right.
He can pester me all he wants. He's a good buddy.
Folks, if you're in the room, we do want to have Brittany back. She's got a tax class as well, or a tax seminar that I think we might find useful. So if you find yourself talking to any other agents about this class today, if anybody asks you about it, make sure to let them know that we expect to have her back. You will come back, won't you?
I will absolutely come back. This has been so much fun.
Fantastic. It's been good having you.
You can get in touch with me. I'm going to drop my email in here if you want.
Fantastic.
And of course, yes. Yeah, you'll say yes, I will, Rob. Yes, I will.
Right.
This has been a blast, and I've been excited talking about this. But what's fun is I really make tax fun because I'm even more excited talking about tax. I know that sounds crazy, but I love it.
Hey, you talk to me about return on investment for rental properties or what makes a residential property right for the right person, then I'm the same way. Whatever it is that floats your boat, it is what it is. There it is, Britt at identax.com. If you have any questions, feel free to reach out to her personally, or if you want to talk about getting something set up for yourself. Okay?
Absolutely.
Good deal.
And
Brittany,
make sure to take advantage of those. Oh, I'm so happy to be here. Thank you so much for having me. Mm-hmm. I'll leave that back, the one on that back wall back there for the Profit first couple chapters.
Okay.
Yeah, I'll leave that up as long as you want to. And yeah, take advantage of that. Get the first couple chapters and at least check it out. It's definitely, yeah, Rob says get the book. The audiobook, like I said, is fantastic and hilarious.
Good deal.
So it's a really good listen, and you're in the car a lot, so it's an even better listen in the car. Of course, I like to take notes while I'm doing it, but
I'm in the dealership, and as I'm talking to you, I'm getting some really strange looks. But anyway, it's okay. It's worth it. All right. Well, again, thank you so much. I can't wait to have you back in again. And, if there's anything we can do for you in the meantime, let us know. Rob, thank you for turning us on to this. And we'll get you back soon. We'll talk outside of the room here and schedule this next one whenever it's convenient for you, okay?
All right. Sounds great.
Fantastic. Thanks, everybody. Have a great day. Go out there and make something happen.
Thanks, guys. Let me know if you need me for anything. I'm here.